So I am so excited to have Mr. Mike Maloney in the house. Welcome, Mike.
Thanks for having me, Ken. It's been a while.
Yes, it's been awesome, but even more, I was like, he signed this book. I get to read it. The Great Gold and Silver Rush of the 21st Century. Congratulations.
Well, thanks. This one was about 10 years in research and production, and it's what I tried to do was give the most condensed, focused education on the economy, how it works, and what's going wrong right now, because they're basically losing control of the economy. I mean, I look at charts on the Federal Reserve's website and stuff. Just yesterday, I was looking at charts, and you could see this Silicon Valley bank failure coming. There was banks needing loans from the Federal Reserve's credit facility started almost a year before this banking crisis. And toward the end of last year, I knew there was another banking crisis coming, and I was really pushing hard to get this done. In fact, my producer-director, Dan Rubach, came up with an idea.
Who's here, by the way?
He's here. I overwrote the book, and I didn't do it in this format when I was writing. I did it 8.5 by 11. So there's 2 online chapters for free. ggsr21.com is where you go to see those.
ggsr21.com?
Yeah, there's accompanying videos and so on. But if you look at those, you're going to understand how the global economy works, because it is a Ponzi scheme inside of a pyramid scam hidden by a shell game.
Wow.
It's really something that it's all an illusion.
First of all, this is so timely. Thank you. This is awesome. We obviously have the BRICS starting up. We have these bank failures, and we have all the reserve banks in the world buying lots of gold.
Yeah.
So I was like, okay, this is perfect. So I don't know which one you want to start with, but which one interests you the most of those?
Well, I started giving presentations on what I called the death of the global dollar standard. And I kept track of the nails in the coffin up until, I don't know, 5 years ago or so. But our most popular video recently was Dan recut a presentation I gave in Singapore in 2012. And that started with the BRICS countries.
Wow.
Forming an alliance, yes, 10 years ago.
You're always ahead.
So everything I was predicting then is coming true today. And it's entertaining to watch, but what's more entertaining is to watch the mass media finally realize what's going on. 10 years into it, there was a possibility of doing something about this, but the weaponization of the dollar against Russia now was like the final nail in this coffin. Now it's not reversible. Now you have world leaders getting together. How do we avoid being held hostage to the dollar?
The dollar's a safe haven for a lot of people, a lot of countries. Clearly not if you have a central bank. But for all the other countries, we had some listeners this morning say, I'm from this country or that country, and right now USD is a safe haven based on our currency. So I look at that, I'm like, where are they going to go, and how's this going to play out?
Well, I can't remember who it was, but I've got a friend that says that, all currencies, it's like they jump out of an airplane. Gold is still in the airplane. All the currencies are falling at different rates. And it's, everybody's using the dollar as a safe haven because it's falling at the slowest rate, but it's still falling.
Yes.
In one of the online chapters, chapter 3, it's just a chart tutorial. It's written it's a very friendly, easy read. But I used to present this chart. Maybe you'll remember it from because we used to do a lot of presentations together years ago. Yeah. And, but I had a chart of a can of Campbell's soup, the price of a can.
I remember that one.
From 1880 to whatever the date was that I was presenting it. This was back in 2010 or something when we used to do that.
I saw you do that in Sydney, Australia.
Oh, really? Okay. Yeah, that was 2009.
Okay.
Yeah. And that I was also doing presentations on the death of the global dollar standard in 2009. That's when I started it. But I'd start with an empty chart and then put a picture of a can of Campbell's tomato soup and a gold coin. And from 1880 until August 15th, 1971, the price zigzagged up and down from 12 cents to 8 cents, averaging 10 cents for 70 years. And then Nixon took us off of the Bretton Woods system, the last vestiges of a gold standard, and immediately the price doubled and then doubled again, and now it's doubling one more time. I didn't realize that until I was writing the book that I wasn't done with that presentation. And so what I've done in chapter 3 is I took the price off of the side and took the pictures out of it, and I've just got the price line there. And I asked the audience basically, what is the price of $1? What's the price of $1? How much does $1 cost?
Boy, I don't know.
Well, it's either minutes of your lifetime, but if you're a grocery store, it used to cost 10 cans of Campbell's soup to buy a silver dollar from the customers. Right. Because that's the store's goal, is to buy dollars from their customers with the goods that they sell. And so it was 10 cans of Campbell's soup is what a silver dollar cost the grocery store back then. So I flipped this chart upside down, and I put cans of soup on the side instead of the price and the same dates, and then put a silver dollar, 10 cans of soup, and then a fiat national currency dollar, which is not money. You should all stop calling it money. It's conferring too much respect on something that deserves no respect. And the value of the dollar falls and falls and falls until today it is worth 2/3 of 1 can of Campbell's soup.
Yep.
And so it was showing the difference between currency and money. Money has to be a medium of exchange, a unit of account, portable, divisible, fungible, which means it's interchangeable. If I loan you a $20 bill, you can pay me back a 5, a 10, and 5 ones, and I don't care. That interchangeability is fungibility. Money has to be those things plus a store of value over long periods of time. And the U.S. dollar has lost pretty much 97% of its purchasing power since the Federal Reserve was established. 97%.
Yep. I actually knew that. And I think what's happening is we're seeing these central banks now buy a bunch of gold to get out of dollars, right?
Yes, but it's mostly the Eastern central banks, which is it's interesting that we're trying to keep the price of gold low. The Western central banks don't want...
Yeah, what's that all about? I mean...
I don't know, but in the meantime, China and Russia are buying at these prices, and India and Turkey, but it's all of the Eastern countries, not the West. And it is low, and I do believe that, if you read this, you're going to discover that back when gold went from $35 to the all-time high was $873 an ounce in January of 1980. So it went up 25 times its original price. Silver went up 41 times its original price during the 70s. And that was 8.5 years. It was actually the biggest bull market in history to that date. But that was the biggest bull market in history. I think that this bull market has only started because the differences between 1980 and today, that bull market in the 70s, the populations that could drive the price from $35 to $8.50 for gold and from $1.27 to $52.50 for silver was just 5% of the world's population up until the last day of 74, when it became legal for Americans to own gold, and then 75, it was legal for Australians. So the second half of that bull market, it was only 10% of the world's population that could legally purchase precious metals on an exchange that caused the spot price to go up. Since then, there's now, the USSR and all the Warsaw Pact countries, there was no exchange. Gold was illegal. In China under Mao, you could be put to death for hoarding gold. There was no exchange to affect the price. So even if you could buy it on the black market from another individual, it had no effect on the price. India, it was coins and bars were banned. Gold jewelry is very, very popular in India. And then you remember commercials on TV, these fundraisers for all the starving children in the Caribbean, Africa, South America, Southeast Asia. So the only people that could really affect it was 10% of the world's population. The world's population has almost doubled since then, and now it's everywhere except North Korea. I mean, there's 18 times more people that can legally buy gold and silver today. They have 55 times more currency. So the countries around, according to the OECD, the countries around the planet have expanded the currency supply 55 times. There's 56 times more millionaires. There's 200 times more billionaires. There's 220 times more available consumer credit that can all come chasing a pile of metals that has only doubled since 1980. So I just see this enormous potential, and it's going to happen when there's some sort of crisis, because that's what gold and silver are. They're crisis hedges. And so they're going to have some sudden spectacular performance someday in the future. And I was in a rush to get this book out because I knew there was another banking crisis coming. If you look at how the 2008 global financial crisis started, there was bank runs in England, and then 6 months later, there was something that happened in the United States 5 months later. Then 6 months later was IndyMac and Countrywide. There were bank runs. The next day, I think it was, Fannie Mae and Freddie Mac were nationalized. So it started out slow, and then it got really fast. And in September of 2008, something was happening multiple times per week. There was some enormous disaster going on that the Fed had to deal with. I think we're just at the beginning.
Yeah, I was going to ask. So obviously you study trends and patterns, and you're one of the best. So, and being 10 years ahead of BRICS, right? The media's finally starting to talk about it. What do you see, and what can people do?
Well, I never make recommendations. What I do is I tell people what I do. And about half of my net worth is tied up in precious metals. I intend on doing a capital gain play during the spectacular performance. And then I want cash flow investments after that. And
yeah. So the spectacular performance, when do you think that might happen?
Well, it feels to me like it's within the next 3 years. Everybody's starting to find out how the global monetary system works. And this is, if you're into economics, you were taught in school this fractional reserve lending model, where a depositor brings in $100 and deposits it, and the bank keeps $10 on deposit and loans out $90. And if that person pays a seller of an item and it gets deposited in another bank, they can loan 90% of that. And so $100 can create $1,000. That was a lie. That isn't the way the financial system works. It's all balance sheet accounting. It's balance sheet tricks. When you deposit $100, that is the liability of the bank, and they need to, at the end of the day, their books have to balance, and so they need to go out and acquire an asset. Usually it'll be something liquid that they can acquire instantly, like a U.S. Treasury. And now their books balance. But when the banks create currency, it's created by you finding a house that you want to buy, or a car, or whatever. So you find a house and you go to the bank. I found this house. I need to borrow $1 million so I can buy this house. And the bank then looks at you. Yeah, your credit's good. They then imagine $1 million that didn't exist until your signature hits that loan document into your account. That's their liability. The asset is the loan that you've just signed. And then you pay the seller, and those brand new dollars are out in circulation. When you're making payments on that loan, almost all of it is interest. That's the bank's profit for the first 15 years. It's the second 15 years that you really start paying off the principal. And when you start paying off principal, the dollars that you use to pay off the principal meet the debt on the balance sheet, and they annihilate each other.
Right.
This isn't money. Money is something that stores value. This is something that appears and vanishes constantly in our society, but we're always borrowing just a little bit more than we're paying off. So the currency supply always grows, but so does the debt. And nobody is asking the moral question, the really important question. You know, people are talking about how the world is drowning in debt, but they're not saying, to whom do we owe? Who had, 305% of global GDP to loan us? Nobody. It's a class of citizens that we've granted a special license to imagine currency into existence and then unimagine it on their balance sheets. And this is a form of theft and enslavement because, first of all, you can't just imagine the dollars into existence that you're going to use to pay off the loan. I know that, you use debt for constructive purposes. Most people out there, though, have bad debt. They don't have good debt.
Right.
And so if if you think you own your house and you're living in it, not renting it, you think again, because it's not until you make that last payment to the bank that you actually own it. You're making a contract with the bank for a rent-to-own scheme, and you're going to, for that $1 million that you borrowed on your house, you're going to be paying the bank $2 million over a 30-year period. But the world is just absolutely drowning in debt, and when these dollars are originally created, they get their purchasing power the second that they are spent into circulation. When you pay the seller of the house, they have now diluted the currency supply, and they steal a microscopic amount of purchasing power from every dollar in existence and transfer it to these new dollars that were empty. They didn't have purchasing power until they got spent. And so you're basically hiring the bank to go out and commit fraud and theft on your behalf. People are starting to learn this now, that those new dollars that the bank created are what creates the inflation that we're experiencing. The Federal Reserve, what's interesting, the Bank of England, it's all in, if you go to Chapter 4 on ggsr21.com, that one explains how currency is created and so on. If we were to try and drill down to figure out, everything is an IOU. The bank, the digits that are in your bank account, the Bank of England says those are reminders that the bank owes you a certain number of IOUs. So it's not even an IOU. It's a reminder that they owe you IOUs. The IOUs that they owe you are Federal Reserve notes.
Yep.
And a Federal Reserve note is a note, which is an IOU. So if you look at the Federal Reserve's balance sheet, it's mostly U.S. Treasuries. And what is a U.S.? So that's if you were going to try to redeem all of these dollars that have been created, where it used to be gold that they owed you. It said so right on the bill, $20 payable in gold coin.
To gold certificates to the silver.
Yeah, right. And those have been replaced with IOUs for IOUs for IOUs. But what's on their balance sheet that they could actually give us if we tried to redeem these are U.S. Treasuries. What's a U.S. Treasury? It's cash flow from future taxation. It's, it's considered the safest investment simply because if you don't pay your taxes, you go to jail. That's the reason it's the safest. They can extort future work hours out of all of us from taxes.
And they get free.
Right. So they imagine $1 trillion of Federal Reserve notes into existence. They buy U.S. Treasuries with these, and now the Federal Reserve notes are an IOU. The entire world economy can be summed up in 6 letters. IOU-YOU. IOU-U. That what backs this note is a promise to extract future taxes out of future work hours.
It's true. So I know there's a lot of discussion around the world's reserve currency right now. It's the U.S. dollar. And I went to a conference that said, it's not going to be for a while. We're they called it the cleanest dirty shirt, the dollar. So,
Max Kaiser calls it the leper with the most fingers left.
Yeah. So, so I hear that, and of course everybody's afraid of is the dollar being replaced, and there's a lot of discussion around it. if that happens, what does it go to?
Well, they're trying to come up with a basket of currencies or the yuan. But the countries that are talking about this are accumulating an awful lot of gold.
They are.
They bought more than since we started keeping records on this back in 1950. It's the highest amount that they've ever purchased. And there's something called S-curve adoption. Have you heard of it?
No.
Okay. So the reason I talk about this, you just drove Dan's Tesla Roadster.
Which, by the way, was incredible.
Yeah.
Thanks, Dan.
Dan
is fast.
Yeah. We've been actually investing in them because I think that most of the time I've been getting ready for a crisis. But then I was comfortable with my position, and so I started betting on the upside of humanity. That's one of the bets on the upside. But
you get to drive it.
Yes, yeah. It's a fun investment. But S-curve adoption, when the automobile was introduced, there's a famous picture of Times Square in the year 1900, and there's one car, and it's all horses and carriages. And then in 1913, there's the same photo, but there is one horse and it's all cars. And what happens is you've got an existing technology, and then a new technology is introduced. Like I was an early adopter. I have the original Tesla Roadster that I've been driving for years. And then more people start jumping on board, and then suddenly they just completely switch. You'll see this with the internal combustion vehicles versus electric over the next, by the end of this decade, probably 90% of the cars being sold are going to be electric. And this same pattern is going to be what plays out with the abandonment of the U.S. dollar as the world's reserve currency and something else taking its place. It'll start out slow, and everybody's going to say, oh, this is going to take 20 years or 30 years. And then there's going to be like this 3-year period where it just like flips.
Yeah, it seems interesting to me. We saw the euro like we put together with 26 countries, I think it was. That's not exactly right.
I think it's 26 countries in the European Union, but not all of them using the euro yet.
And then, but I watched you watched like the Germany upset at Greece and all these things happening, and so some countries were fiscally responsible, others were not.
Right.
So
that's the reason it can't work over a long period of time.
Do you think that'll play again?
To be fiscally irresponsible because it was actually theft. If Greece can run big deficits, that purchasing power is being obtained by diluting the currency supply.
Right.
And then somebody responsible, like Germany, is being penalized by it.
Right. So that's why I was wondering, like, that basket of currencies, they're going to have those same risks, right?
Yes, and that's the reason that this is going to take a while. But, Russia has enough gold.
They do.
They could back their currency right now. China does not have enough gold per person because they've, the World Gold Council supplies data on, who has the number of ounces that each country has. And the U.S. has by far the most. But then if you divide it by the population, we're down at number 12. So we're not the richest on the planet. The second richest, I think, is Switzerland.
As far as gold?
Yes. The richest is, I can't remember what island it is in the Caribbean, but they've got gold and they don't have many people.
So could we switch over to the central bank digital currencies at all? Can we talk about?
Sure.
So I had this conversation with George Ammon the other day, and I know we're going to speak at his event in Rebel Capitalist here in May.
Yeah, so come to Rebel Capitalist. Yeah. It's in Florida.
Yeah, please do that. Jerry, would you put that on the screen too? And so I think, I asked George, all this chaos, is this a way for us, I guess, countries to introduce the central bank digital currency?
Yes, and all of the things that have been happening with crypto lately, it really looks like, the banking crisis that we just had was Silvergate Bank, Silicon Valley Bank, and Signature Bank. So I started making jokes like, if your bank starts with the letter S, you might want to rethink your strategy. But these banks all dealt with either companies that were involved in the crypto space, or they were being used as one of the gateways where, you deposit there and then you send your dollars over to an exchange and you can trade cryptos. And just before that, just the end of last year, we had Sam Bankman-Fried with, I can't remember.
FTX.
Yeah, the FTX scandal. Now, do you know Chris Martenson?
Of course.
Okay. Chris did an excellent expose on that, and it's worth taking a look at. And there's just so much suspicious stuff that it looks almost like this was purposely set up to create a big exchange that would then fail, to cast suspicion, dispersion on the crypto space. And
I thought it was interesting that they let a couple of those banks that exchange crypto, fail.
Yes, right.
That was very interesting.
Barney Frank said that it was basically because of crypto, and then the bank that acquired it had the acquisition. One of the conditions was that it couldn't be used for crypto accounts. Being able to accounts that were connected with exchanges.
Yeah, I saw that. I did a deal with Silvergate. When they started off as a real estate bank, they're based out of La Jolla, and we've done deals with them. And then all of a sudden they switched to crypto, and then poof, gone. I was like, wow, that was interesting.
Yes, yeah. I cover a little bit of central bank digital currencies in the book, and I just call it an evil beyond all evil. I mean, if this is a bureaucrat's, a politician's dream to be able to control the population and to be able to extract, if you want to raise taxes, they can do it retroactively. They can do it instantly. They reward and punishment, just like training an animal. They can train us.
Yep. Well, all the privacy's gone.
Exactly.
What would happen to the regional banks? Because you wouldn't need an account with them, right? It would just be an account.
No, you wouldn't, and that's one of the things that has been holding it up.
Yeah.
But it looks like they've solved that problem, not for the regional banks, but they've solved it for the big banks, which will start eliminating. And what you're seeing ever since the Federal Reserve was established is this consolidation into what will eventually be just one single system with no other options.
Yeah, Yellen kind of put her foot in her mouth when he was, I think it was that senator or congressman out of Oklahoma asked the question.
I missed that.
So it was awesome. He's like, well, how are you going to help then bail out these other banks? Because, Silicon Valley.
Oh, yeah.
And she just fumbled through that whole thing and basically said, well, no,
Right.
So, and what happened after that is people in the U.S. started moving money from these small regional banks into those bigger banks.
Yeah.
And you got to wonder whether or not that was,
well, if you're going to move anything, it's, you're insured for $250,000. So.
Yeah, but, those are individuals. Like,
right.
Any corporation holds way more than that, right?
Yes, but you can, a lot of times they will keep it in money markets so that it's still liquid. But then you don't really have to worry about the insurance. If it's invested in treasuries, you've got insurance that they're going to hold a gun to somebody's head in the future and extract taxes out of them.
That's so true. I know.
Yeah.
Well, Mike, this has been awesome. Guys, make sure that you buy this book, Gold and Silver, Rush of the 21st Century, and it's available at
ggsr21.com, and it's on Amazon, but we've been shadow banned on Amazon. There's information in there that they don't want you to know.
Have you really?
And so, yes, it's now listed as a video game. So don't search for it under books because you will not find it.
That's awesome.
Kindle version will be out shortly, and I just finished the audio book as well. And so it will be available. Hopefully we can get it listed as a book again.
You'll be able to see us at Rebel Capitalist Live down in Orlando. Mike's going to speak down there. I'm going to be down there. That's May 12th to the 14th down in Orlando, Florida. Yeah. Be there or be square. I think Chris Martenson is going to be there too, which will be great. And we'll see you guys there. And again, Mike, thanks for the book, and I appreciate you.
Thank you.